tryna test me. Don't test me. Don't tryna test me.
Hi there, amazing learners. Welcome back to Get It Right with Shola, a place where curiosity meets knowledge. Today we'll be continuing with our series on navigating tax season. This is a guide to planning and preparing for your income tax filing. Today's topic is on tax deductions and tax credits. But before we get started, if you are new to my channel, welcome. I'm thrilled you stopped by. If you like my content, don't forget to hit the subscribe button and ring the notification bell. Now, one thing to note about this presentation is that it is based on the United States tax filing system, which means if you're from another country, this may not work for you or apply to you. Now let's jump right into our presentation. Welcome to the world of tax deduction and tax credits. In this presentation, we will explore the different types of deductions and tax credits that can help you maximize your tax benefits. Let's dive in. Tax deductions are expenses that lower your taxable income. What's a taxable income? Taxable income is the portion of your gross income used to calculate how much taxes you owe in a given tax year. There are 4 different types of tax deductions. The 4 of them are above the line deduction, business expense deduction, standard deduction, and itemized deductions. We're going to look at each of them. Above the line deductions are certain expenses that individuals can subtract from their total income to calculate their adjusted gross income. These deductions are considered above the line because they're considered before the adjusted gross income is calculated. These expenses can be deducted regardless of if the taxpayer decides to use either the standard or itemized tax deduction. A few examples of above the line deduction are your student loan interest, educator expenses for the teachers, and retirement contributions. These are just a few of the many. Standard deduction is a fixed amount that taxpayers can subtract from their adjusted gross income when calculating their taxable income. Everybody is eligible for a standard deduction, but the amount of standard deduction is set by IRS and can vary depending on factors such as filing status, age, and whether the taxpayer is blind. The deduction is adjusted annually to account for inflation. Now let's look at itemized deductions. These are specific expenses that eligible taxpayers can subtract from their adjusted gross income when calculating their taxable income. Unlike the standard deduction, itemized deduction is not a fixed amount. The itemized deduction requires taxpayers to list out and have documentation for qualified expenses. A few common standard deductions are your mortgage interest, which are the interest paid on mortgage for a qualified residence. Also, your charitable contributions. These are donations that are made to qualified charitable organizations. Another itemized deduction that is deductible are medical expenses. Qualified medical and dental expenses that exceed a certain percentage of your adjusted gross income may be deductible. Now, it's important to note that not all taxpayers will benefit from itemizing deductions. Some may find it more advantageous to take the standard deductions, especially if their qualifying expenses do not exceed the standard deduction amount. Taxpayers should compare the total of their itemized deduction to the standard deduction and choose the method that results in the lower taxable income. Now, it's also good to note that tax laws can change, so it's crucial to consult with the most recent tax regulation or with a tax professional for the latest information on itemized deduction. Now let's look at the 4th type of deduction, which is the business expense deduction. Business owners can deduct various expenses related to their business, such as office supplies, training, or travel costs. Qualifying for tax deduction is based on 3 major qualifiers. The first one is the income threshold. Some deductions have income-based limitation. Understanding this threshold is crucial to tax filing. The second qualifier is having support documentation for each eligible expenses. Make sure you have proper documentation for all deductible expenses to avoid issues during tax filing or tax audit. The third qualifier is the IRS guideline. Stay updated with latest IRS guidelines to ensure compliance and maximize your tax benefits. Now let us switch gears to tax credits. Tax credits are incentives provided by governments to encourage certain behavior or activities deemed beneficial to society. Unlike tax deductions, which reduces the taxable income, tax credit directly reduces the amount of taxes owed. In other words, tax credit provide a dollar for dollar reduction in your tax liabilities. There are various types of tax credits. Some common examples are the child tax credit, which is a credit designed to help families with the cost of raising children. The amount may vary based on factors such as the number of qualifying children and taxpayers' income. Another tax credit we are going to look at is the Earned Income Tax Credit, EITC, which is aimed at lower to moderate income individuals and families. The EITC provides a credit based on earned income and the number of qualifying children. Another credit is the education credit. These credits, such as the American Opportunity Credit and the Lifetime Learning Credit, help offset the cost of higher education expenses. Another credit is the home energy credit, the credit for making energy efficient improvements to a home, such as installing solar panels or energy efficient windows. It's important to note that tax credits often have eligibility criteria and specific rules governing their application. Taxpayers need to meet this criteria to qualify for the credit. Additionally, the availability and terms of tax credits can vary between jurisdictions, so it is essential to consult with a tax professional or refer to relevant tax laws and regulation in your specific location. Well, amazing learners. Hope you have learned something new from today's topic. If you have a question or would like to make a comment, you could drop a comment down below or leave your questions down below. I would love to hear from you. If you like today's content, don't forget to hit the like button on the video. Hit the subscribe button and ring the notification bell so you do not miss out on any future interesting topics. Until next time, see you and keep on learning.